So in terms of the starting, I'm going to let you, Peter, seeing as you're on the left hand of the screen, make your bull case first. 60 seconds, the floor is yours.
Well, first of all, you have the fact that central banks for more than a decade have basically created an unprecedented amount of inflation. In fact, inflation is the way governments have been financing their spending. You have major budget deficits, particularly in the United States, but also in other countries. And governments have been financing that spending through inflation. And now that inflation has reared its head, a lot of people think that the central bankers can put the genie back in the bottle by raising interest rates. They can't do it without creating a financial crisis, without creating a depression. And so I think the central banks are about to throw in the towel on the inflation fight. I think inflation is going to win. We're just getting started. Inflation is going to ravage some of these major economies for years and years to come. And I think a lot of people are going to end up getting out of fiat currencies into real money. And I think we're in the early stages of what's going to be probably a historic bull market in gold.
Right on the money. Bart, the bear case laid out.
Well, I'm not quite so sure that the Federal Reserve and other central banks are going to give up the inflation fight just yet. Certainly the FOMC is signaling by their dots that we're going to see the Fed funds at 4.6%. TD Securities, that would be us, are looking at 5%. We see real rates starting to rise quite aggressively as inflationary expectations start to moderate somewhat on the short end of the curve. And as nominal rates rise, that means the cost of carry, that means volatility, all mean less exposure to gold, and we're seeing that so far. So despite of the rally today, we think this was short covering and will reverse. Though longer term, I am quite positive gold, but not quite yet. Real interest rates, not inflation, are the big driver here, and we'll see how much fortitude central banks have. I suspect if they do give up the fight against inflation, it's going to take quite a while. We're going to have to see a significant
All right. But your time is up. Your time is up. I want to go to you, Peter, and get your sense on the inverse relation between the dollar and gold, because everybody has some interest in gold right now. And they're saying they're looking at the dollar, looking at that inverse relation, and seeing dollar as an inflation hedge versus seeing gold, which is traditionally an inflation hedge. What do you have to say about that, the dollar being at a 20-year high?
Yeah, well, gold hit an all-time record high in British pounds last week, so it all depends on your reference point. But the reason the dollar has been so strong is because the world thinks the Fed's going to win this inflation fight. They're not going to win. First of all, the Fed didn't even think inflation was a problem. They thought the problem was there wasn't enough inflation. And then when inflation reared its head, they said it was transitory, and they were wrong again. And now they claim they're going to bring inflation back down to 2%. They don't have a chance of doing that. Inflation is more likely to go to 20% than 2%. And when you're talking about real interest rates, we have negative real interest rates. Right now, the Fed funds rate is just above 3%, and the inflation rate, even the way the government measures it, is 8%. But if you measured it accurately, it's more like 16%. We have substantially negative real interest rates.
You made a very important point there. So yes, versus gold, the lure for versus the dollar, the lure for gold is down. But about comment on the fact that actually in pound terms, gold prices have been rising. People are preferring to buy gold in the United Kingdom versus hedge against the currency. And that's, by the way, the case in India and countries like China as well. There is such a strong local demand for gold.
Sure, very true. But though we're forecasting the gold price in terms of U.S. dollars, through a lot of currencies, gold is doing quite well. But we're looking at the U.S. dollar in this point. And for now, the gold in U.S. dollars, I think, will be under pressure. The U.S. dollar will continue to be quite firm. Big, of course, factor is the Federal Reserve looks to be the most aggressive central bank out there in terms of tightening. I do quite agree. They probably will not tame inflation anytime soon, but they're not giving up this fight, certainly not in 2022, certainly not for most of 2023. We're going to have to see inflation go materially below where it is, somewhere closer towards target. And then, yes, I think they will relent somewhat, there will be a pivot, but it is much too premature.